Hello traders. The title of the video is how to count Elliott waves like a professional. All right, so we are looking at Ekusou, a total return incorporated. So if you think that I'm using a funny accent, the epic is Eco, Quebec. Sierra. That's the epic for that financial instrument. It's a bit of a funny name. All right, so the name is Ekus. So, in case you are wondering what is this saying, or that's the name of the financial instrument, uh, return incorporated. Okay, that's it. That's what we are looking at. That's the epic there. Okay. So suppose you were given this chart or somebody you say, okay, I am an Iliowave student. I am an Iliowave expert. I am an Iliowave practitioner. And somebody give you this chart and say, would you mind to count wave on this chart? So try to look at it. So I want you to count waves. All right. From here to here. Maybe if you want to practice, all right, before you watch the video, you can just, if you have TC2000 or if you have this on your trading view software, you can just go and try to count your wave fast before comparing it to mine and then make a comment in the comment section. Or do we have okay, sufficient disagreement, or do you slightly disagree with me, or do you agree with my wave count before I start counting wave? You can see that the wave count from here to here is not easy, as I'm going to show you right now. Because as an idiot wave trader, your first role is to master how to count wave. You say, George, you said this 100 times. How do I master wave count? By practicing. That's it. You're not going to become an expert footballer or tennis player if you don't train. You need a coach. You need to practice, 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 practice. And that's the only way you're going to master it. And there's no other way. All right? Practice. That's it. Practice plus experience. That's it. So this is not easy. And as I said to you before, you give the same chart, okay, to different Elliott wave traders. They will tell you different story, but not with too much differences, all right? Because we all using the Elliott wave theory, but there will be divergences. One may say something, there may be some disagreement. It's normal. I often say to friends, as long as I am happy with my wave count and I compare it with other wave counts and I'm aware of other wave counts, but I am satisfied with my wave count, I stick to my wave count. Why? Because at the end of the day, when I'm about to use that Ilya wave count to make day or swing trading decision, all right, I will look for a training setup and then follow the training drill, the setup, the signal, and the low risk entry point, and that's how you're going to get paid. All right, because the wave counts will allow us to forecast the market. Yes or no? Where are we? Where are we going? So when we count wave, we know where we are, and now we want to know where we're going to go next. Are we at the end of the impulse wave? Are we expecting a corrective wave? Are we at the end of X wave or W wave or Y wave, a corrective wave, or at the beginning of an impulse wave? So this is it. The count wave is not finished. We want to make decision. That's the whole purpose of it. Yes or no? All right. So have you finished to count it yourself? Please do so before you watch, okay, what I'm about to share. So because I'm going to start counting with, I'm going to go very fast so we do not waste time, okay. Was that your first wave? All right. Okay, good. Was that your second wave right there? All right. Okay, let's move on. Was that your third wave right there? Do we agree or disagree? What was the disagreement? Was it a significant disagreement? Oh, sorry. Okay. Was that your fourth wave right there? And was that your fifth wave? Now compare your wave count to mine. Okay, now, as you can see, my wave count, was there any either wave violation? All right, the third wave should not be the shortest impulse wave. Good. The second wave should not, all right, erase completely the first wave. All right. And the fourth wave should not overlap the first wave, meaning that it shouldn't come in range of the first wave. It looks to me that there was no idiot wave violation because that's the top of the first wave and the fourth wave did not overlap it. And I'm happy with my wave count. But I want to tell you a little bit more because you see, because I'm on a monthly chart like this, all right, normally we do what we call preliminary wave count and then idiot wave validation. Where we are talking about idiot wave validation, now that I count my wave on the monthly chart, I will check the yearly chart, all right. Then I will also go to the lower time frame like a daily chart if I want to investigate the internal wave of each wave. But I'm not going to do that today here. All right. So if I have, repeat, if I have enough data, it looks to me that the stock was listed somewhere here. All right. At that point in time, but it went down before going up to this point here. Okay. So you can, if you look at it from the first wave is subdivided into five minor waves. Can you see that? It's a complex first wave. In fact, this is what we call an irregular first wave. The irregular first wave is usually a first wave that is extended or a first wave that is a complex. If a stock is listed on the stock market, and then sometimes you see you go down first before going up, check. Okay, if you want to understand more what we call the irregular first wave, go to www.24elliottwaves.com and check the irregular first wave. DG2, DG4, Elliott waves in plural.com. All right, so here it is. So first, so if it's the first minor wave of the first wave, agree or disagree. This is the second minor wave of the first wave. All right. What did I say to you before? That the role, the purpose of using the Elliott wave, all right, is to count wave correctly. And after that, we want to make decision to know where we are and where we are headed. That's the third Elliott wave right there. Agree or disagree? Was there an Elliott wave violation? We will find out soon. That's the fourth minor wave of the first irregular first wave. And now here it is, the fifth minor wave of our irregular first wave. Now, some traders may say the third wave should not be the shortest wave. You can see here this third wave is almost equal to the first wave. So I'm accepting it as a valid third wave. But if you disagree with me, I will just put a question mark on top of that third wave there. In my view, it's almost the same length like the first wave. So the fifth wave, the fifth Mano wave of our first wave is extended here. Now, there should be some trader may disagree with my second wave. They will say, "Is here, George." All right, what's the difference? No big difference. The reason why I put it here is because I said to trader that when we are counting wave, okay, and we see a double bottom chart pattern, you remember that? Do you remember that? All right, now I get your attention. We cover that double bottom chart pattern. It's like it did not happen. So the price went up and then come back to the same place. It's like it did not happen. It's something that I learned myself. This is about the experience. That's why I put it here. If you didn't put it there, hold on please. Try to move this away. So you may say, all right, George, your second wave is here. So you're going to say, all right, my third wave from here to here. No big difference. No big difference, okay? But now when you start investigating the internal wave of that third wave, you notice that the first Mano wave of the third wave is cancelled by the second Mano wave because it comes to the starting point of the first Mano wave of your third wave. That's why I prefer to put it here. And our third wave from here instead of here, we don't see any Elliott wave violation. I'm going to show you now the internal waves of that third wave. Are you ready? All right, let's get started. Very tiny second Mano wave. Agree or disagree? So let me know in the comment section if you disagree 100% or you are in fact annoyed by my wave count. Okay, here it is. Are you agreeing or are you disagreeing? Okay, let me know, please. Right there, that's the fourth Mano wave of my third wave. Not that one, but this one. It's still here. The tail is the bigger fourth wave. This one here, and this is the fifth Mano wave of my. So as I explained to you before, normally when we are doing this kind of exercise, we don't stay on one time frame. We'll go to the yearly chart and also to the lower time frame, like a daily chart, even weekly chart, to investigate the structure of those internal waves. I'm happy with what I'm doing here, and I leave it as it is because we can see that we have a correction that was in place now for some time. The trending first started in 1993 and ended. Uh, which year was that? Okay, 1998. All right, and now this is the third wave in black, ending right there, followed by the fourth wave right there. Now, fourth wave and the fifth wave right there. How to count Elliott waves like a professional. If you want to count wave like a professional, all right, you do not use one time frame alone. All right, you do what we call a preliminary Elliott wave count. After the preliminary Elliott wave count, you do the Elliott wave validation by using higher time frame and lower time frame to dissect, to find internal way to make sure that everything is aligning correctly, that you do not violate the Elliott wave rule, that you do not call something impulse wave that is not an impulse wave. Everything is adding up nicely because if your wave count is wrong, that's not a good start. Second thing is that you will also go into the mind of other traders. You may say, George, do I need a Ferrari to go into their mind? No, you don't have to use a Ferrari. You use your imagination. You think like other traders. How other traders may see it, may look at it. Right? Like I show you now, other traders may put the second wave here and understand why they will do that. Then I compare it to mine. I say, was there a big difference? No big difference. They will be buying here, and I will be preferring to buy on the other side. No big difference. Okay? No big difference. Okay? Their internal wave or the third wave may be different than mine, but it's all in the same channel. So no big difference. All right. Their fifth wave will end here. No big difference. Okay? Unless somebody else sees something else that I do not see. So now the trend has ended. You see that the price now going down. What kind of correction do we have here? So allow me to say this again. If I have enough data, it looks to me that the stock was listed somewhere in 1992, if I'm correct. Maybe the initial public offering, IPO, was somewhere at that price level of $10.64. And as they come into the market, the price went down. And this is normal that we have an extended first wave, what we call an irregular first wave, when that usually take place, stock is listed, goes down before going up. All right, this is something. Go to www.24elliottway.com. Don't just stare on the web page, read everything. All right? The reason why I say that is because sometimes I do the same thing. Looking at the thing you think you understand it, you don't understand it until you read it. All right, read it. If you don't read it, you're not going to understand it. You may go through and scroll down. Sorry, simply. Yeah. So now, what kind of correction do we have here? Is it a flat correction? Is it a WSY wave? Is it ABCG correction? Or is it a zigzag pattern? I have noticed that a lot of traders do not like the zigzag pattern. Why people don't like zigzag pattern? If you are a swing trader, you must learn to master the zigzag pattern. This is a zigzag pattern. From here to here, that's the zig. From here to here, that's the zig. This one here, that's the zag, the zigzag. Zig, and this one here, that's the zag. So this move, okay. A, B, C. It's a zigzag pattern. All right, it's a zigzag pattern. That went below, okay, the lowest point of this trend. This now, you can see that this now a penny share at $1.56. Value investors will be pouring on. Am I speaking with my academic English today? Pouring on, all right. The fundamental data is going to Google Finance, all right. They want to perform Google Asset test, all right. They want to check the fundamental. They want to check the management. They want to check the products. They want to check the market share. And most importantly, money, money, money. How much money do they have in their bank account? Can they pay their short term liability at least what is the trend of the money flow in the last 5 years. All right. Now, why after the stock came in, went up, okay, went all the way to $22, is now a penny share. We want to understand first, very important, why people were selling it before we want to buy it. If you do know, we want to know why people were selling before. Now, what has changed? Why should we buy it now? Better management, future looking bright, better product. Check the balance sheet, perform Google Assistant. Ask all the questions that you need to ask that will cause you to buy it now at $1.65. Now, some traders may say, George, well, it went down too much and the only way is up now. That is a speculation. You're doing a speculative trade. It means that you want to buy and hold, knowing that you can lose. But if, fingers crossed, this is a speculation, fingers crossed, and it work well, you may get paid nicely. But you don't want to be a speculative trader. You want to check it, balance sheet, to do it properly, like an intelligent investor. So this will conclude our discussion today about how to count Elliott wave like a professional. One, two, three. If you have any question, suggestion, or blah blah blah, all right, feel free to share it, to put in the comment section. As I told you, I always read a comment and I mean it. In due course, I may be recording a video that is just answering your specific question. Compare your wave count to mine. Was there too much disagreement? Let us know in the comment section what was the disagreement, what was different, all right, and we take it from there, all right. If this video has been truly useful to you, please let us know. Log into your YouTube account because you need to log in first, then click on the terms that please, and I'll say to you, thank you very much. You see, George, I'm not impressed one bit. That's not Texas accent you were talking about. This is not Texas accent, George. It's ridiculous. In fact, I heard the video, I dislike it so much. If you dislike it so much, do something about it. At least mark it down. That will make you feel good. Mark it down, please, all right? But if you say, George, I'm not very sure, but today you have managed to convince me to like your video for the first time, or I feel free to share it on the social media. Subscribe to our YouTube channel to for Elliott Waves in plural, digit 2, digit 4, Elliott Wave in plural. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. The financial instrument that we are analyzing today is a bit of difficult name. I call it Ekusou Total Return Incorporated, EPIC, EQS, Eco Quebec Sierra. We are the TSTW, 24 traders talking about how to count Elliott waves like a professional. One, two, three. 1, 2, 3 mean as fast as possible. Was it fast? All right, let me know in the comment section. Happy to meet you all.